Hi everyone, this will be my last video for May, unless something really extraordinary happens, which seems unlikely, but we can't predict extraordinary things. That makes them extraordinary, I suppose. Just wanted to talk a bit about the frustrating nature of the markets, not just for bulls, not just for bears, but I think for everybody. Let's start with this. This is Exhibit A. This is the Russell 2000 for the past 10, 11 weeks, something like that, maybe more. This goes back to February 16, so actually I guess that's more like 13 or 14 weeks. Suffice it to say, it has during that entire time moved 0%. It's gone down and up and 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 down and up. This is, for those of you who, I mean, maybe 0.5% of people have ridden each of those waves successfully. No, probably more like 0.01%. I mean, it's virtually impossible. Anybody else is being chopped a hamburger. I mean, this is insane. I mean, look at this. This is trendless. This is just static on a radio. So I think that if you're feeling frustrated, take heart. This is the market you're working with right now. Kind of stinks, doesn't it? But let's look at a few basics away from that frustrating fact. First of all, here's the ES, and I still think the bullish case is fundamentally broken. Fundamentally in quotes there. This is technical analysis, of course. We broke this medium trend line and broke this much longer term trend line, and have been just as we broke this one and sort of clawed our way for a few days back up. Likewise, we broke this one and are in the clawing process again. And clawing processes stink because they're confusing and frustrating. Frustration, I think, is the key word here. Same with the NQ. Here's the June NQ, much cleaner. We had the break back here again in February. Down, up, down, up, down, up. And then an attempt to base and push higher, but that failed. And we broke this trend line, which is just kissing right there at the bottom. So goodness knows we want to stay beneath this, but even better would be staying beneath this item right here, and ideally start to fall away from it. That's, I mean, you want to hear "ah" in the background from the traders, ideally, for that sort of thing. A couple of things still worth watching the Forex market, but there will be no clarity in this video. It's just I'm showing you the various elements of confusion. Here's the euro. There was a sloppy head and shoulders here, head, shoulder, shoulder, head, shoulder, but just kind of a mess down here. This, no one's really going to call this a shoulder. It's kind of a squiggly mess. More distressing to me is the Kiwi, which I've mentioned before. This is NZD. It wasn't that long ago, back in, just a week or so ago, that it looked like this. Just beautiful. I think I did a video with this very image at that time, and I got very sensual in my voice seeing this thing. It was just a beautiful, beautiful thing. It's not beautiful anymore. Look at that. Completely flipped around and way back up at the top of this range. So that pattern has been modified. So again, very hard to see what's next. Very hard to see. Let's look at GDX. Let's look at the miners. I had a little bit ago done a post suggesting, when we were down here, that we would push up to the underside and then fall away. We better start falling away before long. Not a lot of time left for that kind of thing. So far, so good on this. And I've got a smallish short position. That's nothing too ambitious. That noise you saw earlier has made me quite cautious. But I would hope that 57.67 would be a pretty firm barrier to any push higher. The longer term on the Russell 2000 still looks, I was about to say pretty good on the bear side, but excuse the dog barking in the background. It's, yeah, I guess the mail's coming. Anyway, it'll stop soon enough. This long trend line's got to get pierced for, I'm going to pierce that dog if he keeps it up, before the bears get too excited. We've still got intact a head and shoulders pattern here, asterisk, kind of a sloppy one. I'd like to see this stay beneath 839.17. Certainly beneath 855.90. Going above this level, yuck. That would be really bad for the bears. Just like this was really bad here for the bears when this shot higher. But what would be perfect would be a descent beneath the head and shoulders, and finally a cracking of that level. Much the same holds true for the S&P 500. As we look here, we would like to see this very long-term trend line. This goes way back to the 666 bottom. Cracking that would be cause for celebration. The level at 1300 that people keep citing, that would be what it would take at this point. Crossing under 300 would clearly break that trend line. Just a couple of other items here to wrap up. The cubes, we are approaching a gap close here. We're going to zoom in. So initially we had this little bitty gap, so we fell and closed that window. And then now we've got this gap. So fallen, starting to climb back. So as long as we stay beneath that 57.69 level, that's another kind of checkbox over in the bear camp. Last thing, kind of a puzzling thing, considering the market's strength today, interest rates. Interest rates fell rather meaningfully today, and conversely, bonds were quite strong. So the TLT here, this pattern just gets prettier and prettier. Volume's just kind of steady there, but this remains a nice-looking pattern, and I think it's worth noting that in spite of equities being up across pretty much the board, the TLT was also up, which is a little unusual. These things normally are kind of more inversely correlated, so worth noting. That's it for me, and I'm done for the day, definitely done for the day, and I'll see you tomorrow, Friday, which should be the last day before the 3-day weekend, then we'll just have one last trading day this month on Tuesday. So good night.